InvestorIdeas.com podcasts.
Good afternoon and welcome to another episode of InvestorIdeas.com podcasts. In today's podcast, going to be looking at a few public and private company announcements, looking at Loblaw Companies Limited, trading on the TSX as L, who is the wholly owned owner of Shoppers Drug Mart, Fire and Flower Holdings Corporation, trading on the TSX as FAF and the OTCQX as FFLWF. Iam Cannabis Corporation, trading on the CSE as IMCC, as well as Neptune Wellness Solutions Incorporated, trading on the NASDAQ and the TSX as NEPT. So first starting with Loblaw Companies, who has taken a significant step towards its journey to provide Canadians with the convenience and security of a digitally connected healthcare network. The company announced today that its wholly owned subsidiary, Shoppers Drug Mart Incorporated, will invest $75 million into Maple Corporation, the leading virtual care provider in Canada, in exchange for a material minority stake in the company. Now, Maple is a thriving Canadian telemedicine provider that allows patients to connect online with a variety of healthcare professionals, including general practitioners, specialists, and allied health professionals. And as the country evolves to a more digitally enabled healthcare system, telemedicine and virtual care have emerged as a key enabler of reliable and convenient access to care. Now, this investment is an important step as Shoppers Drug Mart looks to make this service more accessible, with the goal to provide a seamless experience for patients as they move between virtual and in-person care. The COVID-19 pandemic has proven that Canadians need new ways, particularly virtual ways, to get access to care, said Jeff Ledger, the president of Shoppers Drug Mart. We know that the future of healthcare is digitally enabled. We believe that our store network and infrastructure combined with Maple's technology can help better connect Canadians to the healthcare support they need whenever and wherever they are. Now, prior to the transaction, Shoppers Drug Mart worked closely with Maple on two strategic initiatives that gave the company an opportunity to more deeply understand Maple's service offerings, and Maple Virtual Care is currently available in more than 160 Shoppers Drug Mart locations in BC. And additionally, in the early days of the COVID-19 pandemic, the two companies worked together to make virtual care more accessible to Canadians. Now, in less than a month, this initiative enabled 20,000 virtual care visits during a time when Canadians were asked to stay at home and stay safe. We watched virtual care solve many of the more complex healthcare issues around the globe, as well as right here in Canada through our own program, says Dr. Brett Belchetz, the CEO and co-founder of Maple. We're thrilled to work hand in hand with Shoppers Drug Mart to bring in reliable, convenient, and high-quality access to care that we've developed over the last few years for more Canadians than ever before. So Shoppers Drug Mart now expanding with their virtual and telemedicine healthcare program through Maple. Obviously, I've discussed a little bit about this over the last few months as they have launched this sort of test platform with Maple. Another great step forward. Obviously, Shoppers Drug Mart is obviously paying attention to what's going on within their own internal situation and what's going on internationally and throughout Canada. So being very proactive with how they've been dealing with the COVID-19 pandemic and how they're working on basically getting more and more accessibility for regular medicine as well as cannabis medications during this time. I do think that they've definitely built out their infrastructure a lot, have added a lot more offerings for cannabis medicines over the last couple of months, and now working with Maple, I do think that that's going to solve most of the issues when it comes to medical access in Canada for right now, making it a lot easier as there are Shoppers Drug Marts in pretty much every town, and now having the telemedicine access as well is going to make it pretty streamlined. Again, they still do have a large selection of products they still need to onboard onto their programs, and also it depends on which province you're living in. Obviously, in BC right now, there's a little bit more of this infrastructure built out than in some of the other provinces, as this was their sort of testing area. But I do think in general, over the next year, you're going to see this system really, really buff out and establish itself well as the medical program for Canada. And hopefully, like I said, this will give a good blueprint for other countries that do have similar healthcare programs to Canada and can start looking at this as a nice model to follow, working in the pharmaceutical world where there's a little bit more ease of understanding and ease of access for customers and patients to deal with it and get their medication through that format. So I do think that, like I said, lots of other parts of the world that have similar medical programs are probably going to adopt a similar strategy to what we've seen with Shoppers Drug Mart in Canada right now. And I do hope that you continue to hear news reports about them expanding their both product catalog as well as accessibility, which it does seem to be is what they've focused on pretty much for the last entire year. And it does seem that you're getting now, I know that the last couple times I've talked about it, they've had a lot more patients onboarded. And again, you're starting to see that this is becoming something that Canadian consumers and medical patients are now aware of and using actively. Next, looking at Fire & Flower Holdings Corporation, who announced its financial and operational results for the 13 weeks ended August 1st. So some of the highlights included a total revenue of $28.6 million at a gross profit of 34.8%, compared to a revenue of $11 million in the second quarter of 2019 at a gross profit of 36.5%. The adjusted EBITDA of $0.3 million reduced from $4.8 loss million in the quarter two of 2019. Couple other things you can read in a few more details there. Entered their amended agreement, which includes a proposed early exercise of majority of Ailment Couche-Tard Series A warrants. That was something that I've discussed a little bit in the past as well. And then as well, focusing on some of their next generation products. So launched the Revity CBD private label wellness brand, focused on their High Fire Sparks program membership program, which now has 45,000 members. Now has was in 45 members in the second quarter of 2020 and now has over 145 members, as well as continue to expand their footprint a little bit. So commenting on this, Fire & Flower continues to drive towards delivering positive adjusted EBITDA, and during our second quarter of fiscal 2020, we've made meaningful progress towards the critical goal, shared Trevor Fencott, the Chief Executive Officer of Fire & Flower. Now, we believe that the company is well positioned to expand its footprint in Ontario market and expect to have access to all the necessary capital to support our growth plans. As the cannabis and retail industry continue to adapt to the COVID-19 public health crisis, we will remain on the leading edge of driving consumer engagement in this dynamic environment. So Fire & Flower doing pretty well. Again, not really struggling as hard as some of the other retail establishments out there. I did talk about this early during the COVID pandemic, of how just inadvertently they had set themselves up extremely well to deal with this pandemic, with already having a lot of their delivery and curbside pickup systems in place well before the COVID-19 pandemic, and also having a perks and rewards program through all their retail stores, which is something that only a few of the companies are now starting to adapt to. So they have been well ahead of this, and again, they've expanded and focused their finances quite well during the COVID-19 crisis. So it does look like they'll be able to expand a little bit faster. I did mention yesterday that lots of these retail companies now are using the revenue they generated from the last sort of couple of months, basically 6 to 10 months, and are now looking at expanding again. This is going to be what you're going to probably hear from most of the retail brands in Canada, probably a few in the US as well. Although I would expect less so from the US and more so in the Canadian market. But I do think there's going to be the fight for sort of prime retail over the next coming months, and hopefully looking at who can get the proper licenses in which markets to really take over. Again, Fire & Flower has a really good standing within Alberta and Saskatchewan, but doesn't have as much of a foothold in Ontario or BC, whereas some of their competitors have a much stronger foothold in those areas. So I do think that's going to be their big area of growth or improvement, is to get more expansion into Ontario and BC. And hopefully we'll hear those announcements over the next coming months. But it is showing similar sort of results and expectations that we've seen from a lot of the other retail companies in Canada. And unfortunately, similar to most of the other cannabis companies, upon releasing the financial results, Fire & Flower did take a little bit of a dive, even though it had the standard sort of build-up leading up to the results. So again, following pretty consistent patterns for the industry right now. Next, looking at Iam Cannabis Corporation, who announced the first shipment from its EU GMP supply partner into Germany. The company is also announcing 3 new distribution agreements signed to German subsidiary Agifarm GmbH, bringing the total number of distributors to its German distribution network to 10. The German market is growing rapidly, and we have executed on building an excellent foundation to distribute our proprietary products across the highly fragmented pharmacy channel. And as we scale imports from our EU GMP supply partners, we will continue to add new products and new formats for the German medical cannabis market to establish IMC as a favored brand known for consistency and quality. And our vision for leadership in global medical cannabis is progressing well, and we are on the right path to achieve this goal through a network of trusted partnerships that drive product volumes, brand recognition, and shareholder value in the long term, said Oren Schuster, the CEO of IMC. So they discuss a little bit more on expanding their German distribution platform, which you can read in the article or check out at their company website as well. But it has received the first commercial shipment of medical cannabis into Germany from its supply partner, and the shipment has now been cleared by German regulator and has been delivered to fulfill purchase commitments with 10 distribution partners in Germany. And these brands will be sold in Germany under the IMCC brand. And it now has these 3 new distribution agreements. So you have Cansativa GmbH, Ilios Santa GmbH, and Pharmaco GmbH, who will all also be working with IMC. Talked a lot about them in the past of expanding into the EU marketplace from Israel, and they've obviously really focused on Germany right now. That is still the major market that most cannabis companies are still really fighting for, as it is the most established market, and it does also seem to be the least fractured of a lot of the EU marketplaces to enter. That is the big difficulty that all these companies are facing when entering into the EU marketplace, is that there is not this large chain system of pharmacies like we see in North America, especially looking at the Canadian market. There is no Shoppers Drug Mart of each individual European country to establish all your brands and sell your medical cannabis products through. So until some sort of system like that comes into play, or until you see one of these European countries really make their own one-stop shop distribution model for some form of their medical cannabis program, or one of their cannabis programs, whether it's recreational or medical, there's going to be a lot of difficulties for these companies, which is good for the competition right now. It's also good in general for the consumers, in that they're going to be having access to better products and more competitive prices. But the difficulty, again, is going to be consistency of seeing supply and demand, and also seeing brands show up in the same areas. As again, until any of these companies can really sort this out and have a really proper distribution platform set up there, which IMC is definitely working on, and a lot of these companies are working on. But it is still a far, far off goal that will probably take another year or two to really build itself out, and for you to see some real results, not just in Germany, but in most of the EU marketplace. But I expect Germany will be very much similar to how I expected, again, Canada and their Shoppers Drug Mart program to be something that a lot of other countries look at for adapting medical cannabis programs in the future. I do think that Germany is going to be what a lot of the EU marketplaces look at as sort of the building model for how to deal with the medical cannabis market and how to scale it up. Lastly, today, looking at Neptune Wellness Solutions, who announced that the company has been listed number 11 in the TSX 30 program and named as one of Canada's top growing companies. Now, the TSX ranked Neptune amongst the 30 top performing TSX stocks over a 3-year period based on dividend adjusted share price appreciation through inclusion in the TSX 30 program. And in addition, Neptune has been included in the report on business list of Canada's top growing companies for its 3-year cumulative revenue growth. Now, since Neptune's first publicly listed shares in 2011, the Toronto Stock Exchange has been an outstanding platform for North American investors to participate in the growth of our company, especially in the past 12 months as we've transformed our business from primarily business to business and have extended our reach to business to consumer and direct to consumer, said Michael Camarata, the Chief Executive Officer and President of Neptune. He also notes that it's particularly noteworthy that Neptune is honored during the challenging COVID-19 pandemic. And I'm incredibly proud of how the entire Neptune team has persevered through these challenging times. The first quarter of fiscal 2021 marked a turning point for Neptune, and we quadrupled first quarter revenue to more than $21.3 million and generated gross profit margins improvements, which reflects increasing volumes and efficiencies. And we attribute these milestones to our team's hard work and dedication to our mission of redefining health and wellness, and they remained agile and responsive to challenging market conditions amid the COVID-19 pandemic as we sped up new product initiatives and executed against the strategy of a fully integrated health and wellness business. So I've talked a lot about Neptune Wellness over the COVID-19 pandemic. They're a company that has been extremely adaptive to what's going on in the market. They focused on hand sanitizers, PPE products, lots of different avenues, also bringing out a lot of different health and wellness products that have been received quite well from consumers and have been quick to get their products to market, or at least distributed into stores for sale. So I think them moving away from the business to business model and realizing they can go direct to consumer as well as business to consumer has been a big step forward for them, and I would expect to see more product innovations and more launches over the next coming months And I do think that obviously them being ranked number 11 is only going to help not only the stock price, but in general the company's perception as a pretty consistent health and wellness company. And they already are on a bit of an uptrade right now. So I'd expect them to have a pretty continued good year unless something dramatically changes for what's going on with their company. But as for of things right now, definitely is a good feather in their cap, and also again really does sort of represent what they've been doing actively over the last year, not only the last year but the last 3 years, but very specifically how they've adapted quite well to what's been going on with the COVID-19 pandemic above some of the other companies within the space. That's all for today's podcast. Enjoy the rest of your day. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.